And I earned 15% on $7,000 without losing a cent. This is Deploy Finance, and it promises to trade your money with AI agents. Unofficially, it targets an annual return of 15% or more. It's been trading for me for 90 days. And I'm going to be sharing what I've made, how much money I've lost, whether I'm going to invest more. So my first deposit was just about $2,000 on March 25th. I sent USDC from an exchange to my wallet address on Arbitrum and then hit deploy. All that took about 5 minutes. And then the agent took a few hours to actually get started. And once it started, I was actually surprised by how it worked. When it's in a trade, you receive a payment each hour. The first month generated about $20, roughly about 12%. So not 15%, but not bad at all. And I didn't lose a dime, even with the fees that came in. And the fees here are from trading on the decentralized exchange, in this case, Hyperliquid. So I'm feeling really, really good after my first month. But honestly, I was not prepared at all for what happened in the next 30 days. I'll walk through those numbers, but first, how does the trading agent even make money? So its name kind of gives it away. It earns the funding rate premium from a perpetuals futures contract. But for those who don't necessarily know how it works, it's something like this. You buy an asset, in this case, something like Bitcoin, and then you open a perpetuals futures contract short position for the same dollar amount, but with leverage. And when the perpetuals contract price is above spot price, you receive a funding payment. When the perpetuals contract price is below spot price, you have to pay the funding payments. Now, the reason you can make this trade profitable is that perpetual contract prices are historically higher than spot, which means you'll get paid. And then by owning the asset like Bitcoin and then having the perpetuals short, you create a delta neutral position, which means as prices change, you don't get impacted. So this really is a lower risk trade. And the team behind it, JLabs Digital, has been around since 2018, notes in the documentation what they do to achieve superior results. They say it's dynamic, super capital efficient, and it's fully autonomous. There's zero humans, which makes me super happy. So that's the promise, but it's really different when you experience it. Because from April to May, returns exploded. I earned $85. This was a 4x from the previous month. It would be $1,000 annualized and a 48% annualized return. You heard that right. And again, this is with rebalancing. I didn't lose a cent. And I know because I can see all this in the reporting. You can go through the logs and see all the data. And now I'm thinking to myself, man, this is really, really good. I'm going to go big. I'm comfortable with the performance. The security is great. You own the keys. You can export it to a wallet like MetaMask or something else. There's no KYC or AML, and it's got great two-factor authentication to secure the wallet. So I'm happy. And on May 25th, I deposited close to $5,000. I think I'm going to hit 50% returns in 12 months and turn my 7K to over 10K, something like that, right? And then everything crashes. You see, the token the agent was trading for its dynamic strategy was called Hype, the native token on Hyperliquid. And from April through mid-June, it climbed from $10 to almost $45. And then after that, it pulled back to $32. And from May to June, the value of the perpetuals markets fell like a stone in water. So how much money did I lose? Well, actually, I didn't lose anything. The bot's designed to get in and get out of the market and rebalance for the hedge to reduce losses. I didn't lose a dime. In fact, during that period, I made $91.82. Annualized, that's about $1,100 or 15.5% on all my new capital. And that's where I sit today. I haven't lost any money. I'm making about 15%. And I'm hoping we get another month like May that gives a strong return in 30 days and I can go even higher. Now, a quick reality check before we go any further. There are risks for this strategy and platform. So the most obvious one would be negative funding rates. If the market loses interest, we move out of a bullish cycle, well, the funding rates will dry up and the trade won't make money, and you could actually lose money for a period of time. As I've already said, when the rates go lower, the bot knows how to get out or the agent knows how to get out of the market. So your chances of losses are low, but they're not zero. And then the other part of it is knowing that even though this is a self-custody wallet, I own the funds, there are some reliance on third-party teams. Privy.io is used for the wallet infrastructure. Hyperliquid is used for the trading. If either of those are compromised, there could be some risk that you're not aware of. I would say all these are very well managed, but the risk isn't zero. Would I reinvest? Well, yes, absolutely. My holdings are for the long term, meaning I'm not looking to take funds out until at least 2026. And if rates stay steady, say above 10% or higher, I'll definitely be adding more. And of course, I may reevaluate if the market goes down and returns go below 5% or lower for an extended period of time, like 6 months. So I'm going to be watching this chart like a hawk. But as the team expands the number of agents, I'll likely look to add more funds and diversify into what else they're offering. And I'd love to see a DCA agent that takes money from my bank and puts it into crypto on some kind of recurring basis. That would be awesome. But it actually seems crazy to me to think that anybody would be looking at other solutions. I mean, savings accounts are 0.4%, high yield is 4.4%, money markets are 5%, and even competing protocols offering a delta neutral hedge are really low. This seems like a no-brainer if you want safe, stable returns, which is a huge win in my book. Now, what about taking profits? And to that I say, wait a second, this is crypto. It's one way in. No, I'm kidding. You own the wallet. You can remove the funds at any time. There's no cooldown. You simply hit transfer here, hit withdraw, and kick off that process. Now, absolute returns are just one element that I consider when I'm looking to give money to an AI agent. I'm also looking at things like ease of use, knowledge needed to actually use the tool, trust and risk factors, things like that. And I developed a 25-point scorecard, and I actually ran it on Deploy, unfortunately after I'd already given its money. But the question is, did it pass or fail? Was I a fool? Well, Deploy scored pretty well. It got 79 points out of 105, giving it roughly an 80%. It did really, really well in things like ease of use, returns, and innovation. The biggest knocks were things like it being a brand new offering, being a black box on the code on how the agent actually works, and then the general challenge with getting USDC into this tool. It's a hardship for anybody, either being in crypto or even beyond, coming in new into crypto to use. But you don't have to take my word for it. You can use the link below to download the scorecard and the prompt that I use to run it, and then run the analysis yourself. You can use a tool like ChatGPT. Let me know in the comments how your analysis went. The next episode, I'm going to be looking at another AI agent. I'm locking $100 into Mammo to see if this agent is worth my money. It has some big name backers, but I'm skeptical that it's going to live up to the hype. Let's find out.